French government on the brink? Monday could decide the fate of your portfolio. Forget about waiting for the ECB or the Federal Reserve. The direction of your investments could be determined as soon as this Monday. Global markets have been heating up, with massive sell-offs in government bonds pushing yields to multi-decade highs. Europe has been hit the hardest, with French, British, and German bond yields soaring to levels not seen in over a decade. You might be wondering, isn't the Fed about to start cutting rates? Why are markets still so tense? Here's the key. The French Prime Minister recently announced a confidence vote to be held in September. So, what exactly is a confidence vote? In simple terms, it's like taking the government's credibility and leadership to Parliament and asking lawmakers, do you still trust us to lead? The problem? Betting markets are signaling over an 80% chance of failure, which could force the government to step down. And that's where the real trouble begins. Why? Because the Prime Minister's main mission since taking office has been to cut back France's spend now, worry later fiscal habits and get its ballooning debt under control. But if the leader gets ousted, who's going to stick to the tighten our belts, weather the storm together plan? If the vote fails and the government collapses, the planned fiscal tightening will likely fall apart, leaving France's debt spiral to grow even worse. So, what happens if the worst-case scenario plays out? Which assets will take the hit, and where can you find safety? Ultima Markets has mapped out the potential outcomes. First, French bonds and euro take a beating. A failed vote would spark panic selling in French government bonds, sending yields soaring. Higher yields mean higher borrowing costs, putting even more strain on France's finances. As a core Eurozone economy, France's turmoil could undermine confidence across Europe, likely pushing the euro to US dollar lower. Second, European stocks under pressure, especially French equities. When bond yields spike, risk-free returns rise, making stocks less attractive. Add in the uncertainty of political chaos, and investors will rush to sell risky assets, triggering a sharp sell-off in European stocks, with France leading the decline. Third, safe haven assets surge, dollar and gold. Whenever global markets face turbulence, capital flees to safety. Last week's dollar strength was fueled by global bond sell-offs, and this safe haven demand could intensify further. Gold, with its strong risk hedging appeal, is also set to benefit from heavy inflows, driving prices higher. Of course, there's always a slim chance of a surprise twist. If the government survives the vote, markets could stage a dramatic rebound rally. Recently battered assets like the euro, French bonds, and French equities would likely bounce sharply in a short-term relief rally. Be careful when trying to bottom fish. This is Ultima Markets. See you in the next update.